Bhutan's sovereign investment arm quietly invests millions in crypto, report. Welcome to a new cryptocurrency video. You can subscribe to our crypto channel, where we pin you to comments to receive instant news information and increase your earnings. On 1,000 subscribers, large airdrops and sweepstakes will be held. Do not forget to activate notifications. Druk Holding and Investment CEO Ujjwal Dehol said in a Forbes statement that the issue is confidential, and the matter with BlockFi has already been settled. The Kingdom of Bhutan's sovereign investment arm, estimated to manage around $2.9 billion in assets, has placed millions of dollars in cryptocurrencies and was a customer of bankrupt crypto firms BlockFi and Celsius. Druk Holding and Investments, DHI, a commercial arm of the royal government of Bhutan, has grown a crypto portfolio without disclosing it to the public, according to a report released by Forbes. The funds were brought to light following the crypto contagion in 2022 when companies like Celsius and BlockFi filed for bankruptcy. According to the report, a Celsius filing showed that DHI withdrew over $65 million and deposited almost $18 million in crypto. BlockFi lawyers filed a complaint against DHI to reclaim outstanding assets, alleging that the fund defaulted on its $30 million loan in March. BlockFi claimed that DHI refused to repay the loan in full, after liquidating the 1,888 Bitcoin BTC tickers down $29,365 collateral, worth $76.5 million at the time. On the other hand, DHI CEO Ujjwal Dehol said in a Forbes statement that the issue is confidential and highlighted that the matter with BlockFi has been settled. China's state-affiliated banks onboarding crypto companies in Hong Kong. Chinese banks are opening bank accounts for regulated crypto companies, with several acting as a payment layer for the crypto platforms. Hong Kong's push to become a crypto hub has opened an opportunity for not just crypto companies, but many state-affiliated banks in China. The Chinese banks have shown interest in building partnerships and onboarding regulated crypto companies in Hong Kong, despite a blanket ban on crypto-related activities in mainland China. The Hong Kong arm of the major Chinese state-owned Bank of Communications is collaborating with several cryptocurrency businesses registered in the city. The bank is in talks to open accounts for regulated companies, according to a report published in the Wall Street Journal. In addition to the Bank of Communications, zkEVM, Hong Kong's largest virtual bank controlled by Chinese internet insurer Zhong'an Online P&C Insurance, will also act as the settlement bank for the crypto companies. The banks will together facilitate the depositing and withdrawal of fiat currencies, along with providing account services to cryptocurrency businesses. These banks will serve as settlement banks to enable token deposits at authorized exchanges to be withdrawn in Hong Kong dollars, Chinese yuan, and US dollars. At the start of the year, Hong Kong's Financial Secretary Paul Chan clarified that the city is pushing to collaborate with more crypto firms in 2023. As a result of the government's progressive crypto approach, nearly 80 cryptocurrency firms have shown interest in opening or expanding their business in the city. The government's crypto push has attracted some surprising allies in the form of Chinese banks and funds. As Cointelegraph reported, besides onboarding crypto companies and opening bank accounts for regulated firms, the Chinese government-backed CPIC Investment Management launched 2 crypto funds. CPIC is the second-largest insurance firm in mainland China, and its newly launched crypto funds are focused on institutional investors. China's growing interest in crypto via Hong Kong has surprised many in the crypto ecosystem, as the country has carried out multiple crackdowns on crypto-related activities in mainland China. US crypto exchange faces potential action from SEC, report. Bittrex had already started winding down operations by the time it received a notice of potential action from the SEC, the General Counsel said. The United States-based cryptocurrency exchange Bittrex is reportedly facing potential action from the US securities regulator, despite preparing to shut down local operations. The Enforcement Division of the U.S. Securities and Exchange Commission, SEC, is inclined to recommend the agency sue Bittrex over alleged violations related to investor protection, the Wall Street Journal reported on April 16. The enforcement unit informed Bittrex about potential action from the SEC in March, Bittrex's General Counsel David Maria reportedly said. By that time, the Seattle-based crypto firm had already started the process of winding down its U.S. operations, the attorney stated. In the notice of potential enforcement action, known as a Wells Notice, the SEC wrote that Bittrex had violated laws by doing business as an exchange, broker-dealer, and clearinghouse without registering with the regulator. According to Bittrex's General Counsel, the company discussed with the SEC in late 2022 how to register its operations. The crypto firm found that there was no opportunity to follow the rules of the SEC without essentially ceasing all of its revenue-producing activities in the country. Attorney Maria stressed that Bitrex's inability to comply with the SEC rules was due to the agency not providing clear regulations for crypto in the first place. He stated, "The lack of regulatory clarity here results in substantial costs and no certainty as to what can and can't be offered. Bitrex is not aware whether the SEC is going to file a lawsuit now that the company is terminating operations in the United States," Maria said. If the agency decides to take action, Bitrex will litigate unless regulators came with a reasonable settlement offer, the counsel reportedly added. The news came soon after Bitrex announced plans to stop all operations in the United States on March 31, citing the challenging regulatory and economic environment. The exchange advised U.S. customers to withdraw their funds by April 30, 2023. Before it decided to leave the United States, Bitrex had faced some issues at home. In 2022, Bitrex agreed to pay more than $29 million in fines from the U.S. Department of the Treasury's Office of Foreign Assets Control and Financial Crimes Enforcement Network. The settlement was related to sanctions violations in the Crimea region, Cuba, Iran, Sudan, and Syria between 2014 and 2017. Aave's proposal to launch on zkEVM passes temperature check a vote. A temperature check proposal to deploy the decentralized exchange, DX, Aave on the zkSync era mainnet has passed with overwhelming support from the Aave community. When voting closed on April 16, more than 99% of Aave Aave tickers down $80.90 token holders casting ballots had voted in favor of launching the third version of the lending and borrowing protocol on the zero-knowledge Ethereum virtual machine, zkEVM. According to the proposal first pitched on March 26, the launch will be limited to USD Coin now that the temperature check has indicated a positive sentiment. The next steps listed in the proposal will be to proceed to another stage for further discussion, followed by risk parameter evaluation and finalization of the proposal. If the next stages are successful, the proposal will be submitted for voting and on-chain governance approval. Only around 0.02% voted against the proposal, with a further 0.02% abstaining from voting. According to the proposal, deploying on zkSync can benefit the Aave ecosystem by introducing new users into decentralized finance and cementing Aave as a premier borrowing platform within the zero-knowledge ecosystem. The Aave community previously voted to deploy the Aave v3 codebase on zkSync's v2 testnet, which was approved in another off-chain vote. Decentralized exchange Uniswap is also set to launch on zkEVM solution from scaling solution provider Polygon, after a governance proposal was successfully passed. In November 2022, Aave changed its governance procedures after it was hit by a $60 million short attack that ultimately failed. Ethereum tapers gains after 12% rise post-Shanghai. Significant withdrawals after the Shanghai upgrade, and the dollar's strength may be weighing on the second-largest cryptocurrency. Ethereum's post-Shanghai bull run has hit a lull. Its price touched lows of $2,080 on Monday morning, while Bitcoin struggled to hold onto the $30,000 support level. The bullish run-up may have been paused in part due to the U.S. Federal Reserve's statements regarding one more rate hike in the upcoming May policy rate meeting. Additionally, withdrawals from Ethereum staking contracts continue to outpace deposits, potentially adding sell pressure to the asset, per data from Nansen. On April 15, there was also a massive 85,393 ETH withdrawal executed at 10 a.m. Eastern Time, followed by another 66,030 ETH withdrawal an hour later. Ethereum's price has risen roughly 12% since last week's Shanghai upgrade. It enabled withdrawals of staked ETH from the proof-of-staking chain, a feature not available since staking was first launched in December 2020. The network quickly saw a hefty inflow of deposits to the staking contracts, and the market reacted positively to the successful change, with Ethereum propelled to new yearly highs above $2,129. However, on April 14, statements from Fed officials that hinted at another rate hike in May strengthened the dollar. A strong dollar can have a negative impact on other, more risky assets such as cryptocurrencies and stocks. Christopher Waller, a member of the Fed's governing board, and Atlanta Fed President, Raphael Bostic, told Reuters on Friday that the Fed may go through one more quarter percentage gain before ending its quantitative tightening to curb inflation. The CME FedWatch tool, a survey of CME's interest rate traders, currently places an 88.2% chance that the Fed will increase its rate. Another rate hike makes the dollar an attractive investment in annual returns, too, potentially diminishing the appeal of top cryptocurrencies like Ethereum to investors looking for stable yields.